All right, my friends. Welcome one, welcome all to the Florida home buying webinar, where we'll be talking about the complete guide to buying a house in Florida in 2022 to help you avoid costly mistakes that could potentially save you thousands of dollars. So let's go ahead and dive right on in here. Today we're going to be talking about the current real estate and housing market here in Florida, why it's so hot, so competitive, and how you can get the upper hand here. We're going to talk about how to get pre-qualified for the loan amount that you need to find the house of your dreams, and also break down the home buying process into 10 simple steps for you. So first off, before we get started, just want to take a couple of moments to ask you some questions. So the first one, you can just drop it in the comments below, is how you feel about buying a home right now. So I know a lot of people can be kind of overwhelming. There's a lot of information out there. Don't know where to get started. I've been talking to a lot of people here recently, especially that are first-time home buyers. So if that's you, you're in the right spot. Stay tuned. And so I just kind of want to get a feel for where you're at. How do you feel right now? Do you feel uncertain, intimidated? Do you feel a little stressed and frustrated maybe, or even anxious or overwhelmed with the whole process? So don't worry, we're going to break it all down for you. So my goal here is to make sure that you feel confident and informed about the home buying process and help you find the home that you love. So for those of you who don't know me yet, my name is David Arthur Bailey Jr. I've done over 890 plus closings. I think 96 was the last one I just saw in the system as of the time of this recording, helping homeowners, buyers, and sellers across Central Florida here. I'm in Pinellas County. Pasco's just a couple miles north, and Hillsboro's to the east. But I get up as far as Ocala, down as far as Fort Myers, and out to Orlando. So been all over the place. Got all kinds of crazy good stories to share with you. Just by way of introduction, to tell you a little bit about my story, how I even got into this. Way back in the day, many a year ago, I, after high school, was kind of in that, I don't know what I want to do when I grow up phase of life. So I decided to take a year off and go down to Brazil. And I got lost down there. It took me 20 years to find my way back home to Florida. So while I was down there, I started teaching English as a second language, taught in a couple of different schools. And the last school I was at closed down. The owner went back down to southern Brazil where he was from. So school closed down. I had a friend in the marketing department who was pretty bummed out because he had just lost his job. His girlfriend had dumped him the same week. And so he came over to my house one day for lunch, and we were talking, and it was just kind of like, you know how to do marketing, I know how to teach English, we should start our own English school. So we did, and ended up doing that for another 17 years. He's still running it down there. I just kind of semi-retired and came on back to Florida because during that time while I was there, I ended up falling in love, got married, living my happily ever after, the whole 9 yards. You know the story. Every good story, there's always a woman involved, right? So anyways, I have two beautiful daughters who were born down there. And I'd been saying for years that I was going to come back to the U.S., bring the kids back to brush up on their English, get ready for college. And one thing led to another, just kept putting it off. And then boom, one day I wake up and realize my oldest daughter's starting high school. So I said, if I don't go back now, I'm going to end up retiring down here. So packed everybody up. Came on back to Florida, still trying to figure out what I want to do when I grow up because you don't need a whole lot of English teachers. Well, the English as a second language, right? Because almost everybody here already speaks English. So I kind of fell into the title side of things. I had a friend who went up to New York, needed somebody to cover for her. She got sick, so I kind of just fell into this. I had my notary commission. They needed a notary to help with some closing documents, and just one thing led to another. Still doing it here, and it's a fun gig. I enjoy, just driving around all over Central Florida, meeting homeowners, people buying and selling homes, refinancing homes, and So I decided to get my real estate license and then my mortgage license originator, my my MLO, and so just kind of trying to figure out where I fit in this whole real estate industry. But one of the things I really love doing is teaching still, just because I did that for so long, right? 20 years of teaching, it's in my blood. So today, I just want to share with you some information, some insight, facts, and figures and data, and help you out. So before we jump into this, though, I'm not done asking questions yet. I do want to understand where you're at in your home buying journey. So if you could take a moment and just go ahead and answer some of these questions for me, it'll kind of give me a better idea of where you're at, what kind of information you need, so that way I can personalize this webinar for you. Obviously, if you're watching the recording at some time in the future, go ahead and drop your answers below anyways, just because that way I'll still see them, and each webinar I can improve on and make better. So question number one, what is your single most important question about buying a home? Right now in your head, what's the question that you have? What's the big thing? Question number two, what happened today in particular to make you sit down and watch this webinar on buying a home? So why are you here? You know, you're out of all the things you could be doing, I really appreciate the fact that you're here. So thank you very much for taking time out of your busy schedule to join us. But why don't you just go ahead and tell me what it is that got you here today, so that way I kind of understand where you're at. Tell me a little bit about your story, what's going on, and there's always a good story involved behind every journey, right? So as we start your journey or move you along in your journey wherever you're at, tell me a little bit about your story. I'm excited to hear that. And then, of course, question number three, just let me know how difficult it's been for you to find a good answer, the information you need about buying your home for this particular problem or challenge that you've been facing. So go ahead. I'll give you a minute here. While you're typing in your answer, I'm just going to run through and tell you a little bit about what we're going to be talking about. So go ahead, don't stop writing your answers there. If you're watching the recording, you can just pause it. But basically, we're just going to be going over, like I said, the market, what's going on in the market, why it's so hot, why houses are so expensive. We're going to talk about the different phases of the home buying process. We're going to talk about building your team, the people you need on your home buying team, and how to find the right people for you that are a good fit. We're going to talk about how much house you can afford, how to get pre-qualified for a loan, if you should go with a lender, a mortgage broker, 3 things that lenders are going to look at to approve your loan. We're going to talk about alternative options if you can't get approved for a loan right now, things that you can do while you work on building up your credit, saving up your down payment, whatever you need to do to get that loan approval. We're also going to talk about how to fix your credit if you need to. We're going to talk about what kind of loans are out there. We're going to talk about first time excuse me, home buyer incentives in your region. We're going to talk about the kind of houses you can look for. We're going to talk about mistakes that you can make when you're looking for a new home. We're going to talk about how you can create a competitive offer, so when you find that house of your dreams, the house you love, how to make sure you get it in this crazy market. We're going to talk about negotiation tips to get the best deal. We're talking about what happens after you get a house under contract and the things that you could potentially do that could cost you money in the long run. We're also going to talk about what to look for in your final walkthrough. We're going to talk about your closing cost and all of those documents, that 150 to 250 pages of documents you have to sign on a closing day. So we got a lot of ground to cover here. Let's go ahead and jump on in. So here we are. We're going to jump into the Florida Real Estate Market Report 2022. We're going to talk about what's going on in today's crazy housing market and how you can compete in this crazy hot mess. Now, just so you don't think I'm just pulling numbers out of my hat here, this is the prices, the median sales prices of homes sold in the U.S. starting back before 1965, looks like around 1960 there. These shaded areas indicate recessions that we went through. This widest run right there is that current recession from in '08, and then currently with the pandemic going on right there. So this kind of gives you an idea of what's going on with housing prices. So you can see here back in the 60s, houses were running around $15,000 to $20,000, and that's pretty much what I hear from people. Did a signing down in South St. Pete here recently, and the lady was telling me that her dad bought the house. Her and her brother were selling it. She said her dad bought the house back in the 60s, and I think he paid like $12,000 for it. You know, it's going for over $1 million today. But those are the kind of stories that I hear. I was talking to another real estate agent who said that, I don't know if it happened to him or a friend of his, but he said back in the 60s, this guy walked into the brokerage and said, hey, I've got these lots, this land that I want to make lots out of and sell them. I'm going to sell them for $5,000. And this was right on Clearwater Beach. And he said they basically laughed him out of the brokerage and said, you're crazy. Nobody's going to want to buy land right on the water in Florida. So just so you can see how things change over the years. So prices went from about $20,000 in the 60s. And now we are up at over 400,000. So I'd say we're looking at around 420,000 there. So you can see just in the last 2 years, it's crazy. Since I moved back to Florida the past couple of years, the amount prices have gone up. So you can see back about 2 years ago, they were running right around 320,000. Now we're up over almost to 420,000. So you can see that there are dips and bumps along the way. Prices do fluctuate, go up and down. You can see here we had during that recession, prices went down a bit, but then they bounced right up and they're continuing to go on up. So what does that mean for you as a home buyer in today's market? The market here in Florida right now is super, super hot. So if you're a first-time home buyer, if you already have a home but you're moving to Florida now, let's talk about what's going on. All right? Inventory is at a 40-year low. When we talk about inventory, that means the number of houses that are available on the market. Now, that doesn't mean there aren't any houses to buy. There's lots of houses to buy. People are buying, selling houses today. I just went down to do a closing this morning. I got another one here in a little bit. So every day, people are buying and selling houses here in Florida. But we are at a low. That just means that we look at the inventory. The number of houses that are available on the market are enough for at least 6 months. If nobody else listed a home, if we'd have enough for 6 months, that would be in kind of at the equilibrium. So if there's less houses on the market than the demand for 6 months, we're in a seller's market. That's when it's hot. If there's more than 6 months available, then we're in a buyer's market. So right now we are in a seller's market. Sellers are holding a lot of power. So I'm going to share with you some tips and strategies, things that I see going on every day that are going to help you along your home buying journey. But we see that even though inventory is low, a lot of people are coming in from out of state and paying cash. Not just people coming in from out of state, but typically what we see is people are selling a home, 4-bedroom home for $1 million in California. They come to Florida, find the same 4-bedroom here for half the price, and boom, they've got money to blow. You right? So they're buying the house, and the people who are trying to get in with their financing aren't able to compete. Now, I'll actually share some stories with you about that here in a minute. But continuing along, I don't want to jump the gun here. So when a house goes up on the market, typically if it's priced right for the market, they're getting multiple offers. That means I'm talking to people I went to do a signing. Guys like, I put my house up for sale over the weekend, got several offers on it, and got $20,000 more than I was asking for it. So this is what we're seeing. 72% of the houses going on the market are getting multiple offers. So you're having to bid against other people. So the seller's got choices, right? It's not like, oh, you're the only person making an offer, so he has to accept it or not. No, he's got options. So we're seeing as many as 60 offers on a single house. People are putting up a house for sale and just getting a ton of offers. Bidding wars going on that are driving the prices up to 50% over asking. So there was a house down in Indian Rocks Beach. A realtor friend of mine was telling me he was working with some clients. He said the asking price was $900,000. So they didn't really want to bid much over asking, but he's like, look, it's a tough market. I recommend you bid at least $50,000 over. And if you're lucky, we'll get it. He said the price was over $1 million that was the offer that got accepted. So that's the kind of market we're in. People are bidding more than the sellers are asking just to make sure they win the offer. And houses selling in as little as 4 hours. So this particular house, I was talking with this lady, went to do her closing, and she said she put it up for sale, sold it in 4 hours, got 4 offers on it. The first offer she accepted fell through. The financing didn't go through. It fell through, so she went to the second one. The guy came in brought his fiance to look at it. The fiance didn't like it, so they walked away from it. So that left the last two, number 3 and number 4. Number 3 had financing, and number 4 was paying cash, but they were offering a lower price. She said she went ahead and just took the cash offer, even though it was less, because she was just afraid the financing might go through on the third one. She didn't even want to deal with it, so she just took the cash offer and took her money and ran. But that's what we're seeing going on in today's market. Now, what happens is a lot of people want to run out, start looking at houses, and then they see a house they like, they want to buy it, they go to get a loan, and one of several things can happen, right? Their offer can get rejected, they might not get approved, the amount's too low, or it takes too long to get approved and the deal falls through. So let's say you go out, you're looking at houses, you find the house of your dreams, right? But you don't have a pre-approval letter, so the seller won't even accept your offer. It's immediately rejected, right? They've got 10 other offers with people paying cash and showing their pre-approval letters. You haven't even started the loan application process, so they're not even going to accept your offer right off the bat. Or maybe they actually do accept your offer, so you run to get your loan approved, and you can't get approved because there's issues with your credit or your income or your down payment amount or whatever, and so you don't get approved for a loan. That can be frustrating. Or let's say that you do get approved for a loan, but you're looking at houses that are around the $400,000 mark, and you can only get approved for $350,000. So you either have to make up the difference, or if you don't have it, then you have to start looking at cheaper houses, smaller houses, not so nice houses, and that can be frustrating, especially if you've already been out there looking at the really nice homes, and now you have to go with something that's a little, fits within your budget, that's not quite as nice. Or let's say your offer does get accepted and you're going through the application process, but it's taken longer than expected, and that can be frustrating. So before you even run out to start looking at houses, I recommend you jump in, take a look at, talk with a lender, and see what you can get pre-approved for, right? So I think my water's coming back on, so don't mind the noise in there. Water went off, and now the pipes are going crazy. So if you hear that crazy noise in the background. But here's what you can do. Even before you jump in, because the whole idea here is it doesn't matter if you're ready to buy a house right away, if you're looking 3 months out, 6 months out, even a year out, no problem. The more time you have to prepare and get ready, the better, right? So you can go ahead and work on boosting your credit score to get the best rates. And that's an interesting story, because when I first came back from Brazil, I didn't have any credit, right? So zero. Here I am, 40 plus years old, walking into the bank, trying to get a credit card, and the lady pulls up my account. She's like, dude, your credit score is 0. I've never seen this before. Anyways, long story short, what I found out was if you don't use your credit for 6 months, your score goes to 0. So if you haven't been using credit for a while, you want to start using it. If you do have a score, but it's not very good, you want to boost it, because then you get better interest rates. So I went to buy a car, right? So I go to the dealership, looking at the cars. I see a nice car we like. We go in to get approved, and my interest rate, subprime rates, were like 17, 18%. And I had to put a down payment and all that. Whereas if I had had a good credit score, I could have, probably walked out without making a down payment and gotten a, 3-4% interest rate. So after that, once my score went up and improved, then I started getting letters in the mail. They're like, hey, you're probably paying they were pretty spot on too with the amounts I was paying. You're paying so much. This is your interest rate based on what we've seen. So now that your credit score has gone down, we'd like to offer you this. And it was like, $100 cheaper. and interest rates were a lot better. I think I got like as low as 2.99% was the last one I had seen or whatever. So the better your score is, the better interest rates you can get. So now's the time to start boosting your credit score. So once you apply, you get those best rates. Start saving for your down payment and your closing costs, because that's going to influence the amount of loan you can get. So let's say you go for an FHA loan where they only require 3.5%. So let's say for a $100,000 house, you need to have a $3,500 down payment, right? If you're looking at a $300,000 house, then you'd need what, like a $10,500 down payment. So if you don't have that down payment, then you can't get as big of a loan, right? Because you've got to have enough for your down payment to cover the amount of the loan. So now is the time to start preparing, is what I'm trying to say. So just stay flexible in your options as you think about the kind of house you want. You know, you're going to go out, there's going to be houses popping up, they're going to be going fast, so just stay focused. When you go in, when you do find the house of your dream, be ready, make a strong initial offer, and even now, begin building a great team to help get you to closing. I hope to be a part of your team. I hope to help you find the house of your dream and be there for you along the way, whether it's right now, whether you need to start working on your credit score, we can help you with that. If you need a loan, I can help you with that, connect you with my team. If you're ready to buy a house, you've already got the loan and everything, we can help you with that. All right? So right now, though, is the time to start building your team. Start talking to people. So talk to different lenders, talk to real estate agents, talk to people that are in the real estate industry, your friends, people that you know, family members, and just start getting feedback, right? Start networking, getting to know people, finding out who they know that can help you. And as you move along, once you're ready to buy your home, you're going to have a great team to support you and help you along that journey, because it's going to be stressful, it's going to be intense. So let's go ahead and jump in and talk about the home buying process in 10 steps, 10 simple and easy steps, right? Everything's simple and easy when you break it down. Now, once you get into it, it can be frustrating, stressing, there's everything going on, but we're going to help prepare you so that way, hopefully there won't be any major crazy surprises. You'll know what to expect and be prepared. So we're going to talk about how to fund and find the house of your dreams right now in 2022 and close on it quickly in this crazy hot market. All right, so here we go. Step number one, like we already mentioned, the main thing to do right now is to start boosting your credit scores. Fix any issues with your credit so you get the best rate possible. Just like I told you that story about my interest being super high and having to have a higher down payment because I was in the subprime category. After I got in, started, building up credit, my credit score increased, my interest rates came down and improved a lot, a whole lot, like almost 25% more. So make sure that you are even right now working on your credit score, improving that. Go ahead, check your scores, check your TransUnion, Experian, Equifax credit scores, and see where they're at and what you can do to improve them. Talk with somebody that can help you improve your scores. That's something I can help you out with. But there's a lot of great people out there that can do this. I don't want to just hog you all up to myself, but go ahead and find out what you can do to boost your credit scores, right? You can remove inquiries that don't need to be there. Every inquiry on your credit report will lower your score about 7 points, right? So if you've got a whole bunch, like let's say 10 unnecessary credit inquiries, and you can get those removed, that could increase your score by what, say like 70%. So I remember when I went to get that car, because I had the low credit score, I'd just gotten back and I was in that subprime category, they ran like 10 different credit checks on my report. So that was on my credit history there for like 2 years. So that was just all those extra credit inquiries lowered my score. And that stayed on there. Every time I checked Credit Karma and stuff, I could see those still up there until they started falling off. But go ahead and pay down your credit cards, right? Because if you have a high amount on your credit cards that you're using every month, that'll lower your credit cards as well. You need to consolidate debt, get some credit counseling, get into some financial literacy programs, whatever it is you need to do to begin boosting those scores the better for you. Now, if your score is already great, perfect. That's wonderful, fantastic. You're ready just to move right along. You can completely skip that step. But I would say for a lot of people out there, even if your score is not bad, but there are still things that you can do to improve your score, right? And here's what lenders are looking for when they approve your loan. We call these the 3 pillars for loan approval. CIA, that is your credit score and payment history, your income and employment history, and your assets and liabilities. So your credit score is just reflects your credit worthiness, so to speak, how risky you are as a person for the lender to loan money to, right? So the lower your score is, the greater the chance that you won't pay back the loan. The higher your score is, the more sure they are that you're not going to default on the loan, that you have that you care about your making your payments on time, etc., that you've got the funds necessary to pay off your loan. So you definitely want to look into that, see how you can boost your scores there. We're also going to talk about, they're going to look at your income and employment history, how much money you make versus how much you are in debt. So they call that your debt to income ratio. And there are percentages there. So if you go in with a really high debt to income ratio, let's say you make $10,000 a month, but you're $8,000 in debt each month, then that's a really high debt to income ratio. So even though your income's good, but your debt to income ratio is too high and you might not get approved because of that. So that's something else to think about. So consolidating that debt so that you're making smaller monthly payments and that ratio isn't so high. They're also going to look at your employment history, gaps in there. So they may ask you to clarify why there are gaps in your employment. Like, why didn't you have a job in the U.S. for 20 years? Because I was down in Brazil teaching English, right? So all of these things are parts of what your lender is going to look at when they are approving you for your loan. And also your assets and liabilities. That's the money that you have in your cash that you have in your savings account, for example, that you can put towards a down payment that you can use to pay your closing costs. And just so that they know, obviously the house that you're buying will serve as collateral for the loan, but they also want to know that you've got some padding there, some money ready to go for your down payment, your initial down payment, and your closing costs, which typically are going to run from, say, around 4 to 7%. That's typically what I see. Usually if it's a cash deal, I see the closing costs are pretty low, maybe around 2%, but typically if someone's taking out a loan, it's going to be in that range for the origination fees. You've got your title and settlement costs, your government recording and transfer fees, prorated taxes, all those different things depending on the property you're buying, what part of the year you're buying it. All those things are going to influence the amount of your closing costs, your appraisal fees, your inspections, etc., right? So you just want to be prepared for that. And typically, general rule of thumb that I've seen and I've heard people mentioning is 4 to 7%. So if you're looking at a $300,000 house, let's say, for example, you'd probably want about $12,000 to $20,000 there just to put towards your closing costs, depending on the kind of loan you're going to make, right? So we're going to talk about that in a minute. Let's go ahead and continue on. Remember that down payment is important. So let me just go back here for a moment, because I think we already mentioned this, but I don't remember, so I just want to make sure I clarify that. So let's say you get an FHA loan that requires the 3.5% down payment. So if you're looking at a $300,000 house, you're going to need to make about $10,500, right? So the loan, the lender's going to cover 80% to 96.5% of the house with the loan, and you're going to have to come up with the rest as down payment. Now, there are down payment assistance programs. We will talk about those as well. And you can take out a second loan, a piggyback loan, just to cover that ratio there, so you're not having to pay the PMI, the mortgage interest rate, and everything that goes on. But we'll be talking about that in a minute. So I don't want to jump too far ahead of myself, but I wanted to make sure I cover that. So saving up for your down payment is super important right now. So if you don't have that money saved up yet, even before you go out and start looking at a house, before you go out and start talking to a lender, see how much you have saved up. Create a budget for yourself. Creating a budget is important for you just so you know what you feel comfortable paying in your monthly payments, right? So buying a house is a big decision. You don't want to go out there and talk to some pushy loan officer who's going to try to push a bigger loan on you than you can make payments for, and then later you're suffocating because the payments are too high and you're frustrated. So before you even go to talk to them, you come up with your budget, see how much you feel comfortable paying, right? So you're going to have your principal and interest, which is what you're paying back the loan, but you're also going to have your taxes, your insurance that you're going to have to calculate into those monthly payments. So it's a good idea when you go out, you can actually see this when you're looking at a house that's available for sale online. There are mortgage calculators available that show you how much you can expect to spend on your monthly payment depending on the kind of loan you get. So you can have a pretty good idea of how much your monthly payments are going to be. So if even if you're making a good amount of salary, but a lot of that's already tied up, you just say, hey, this is what I feel comfortable spending on my mortgage payments each month. And that way you have a good idea of how much you can afford and estimate that even before you go out there and start looking around and talking to a loan officer. So let me just go back here briefly. And yeah, I think we covered everything there. Want to make sure I didn't forget anything. So talking about building your team, right? This is actually step number 3. It says number 2 there. I have no idea why. I checked and double checked and triple checked everything, but still somehow missed that. But I will hopefully update that here later on. But step number 3 is building your team, right? So you're going to start talking to people. Talk to real estate agents, loan officers. I'm sure you have friends, family members, people that you know. You have questions, you can talk to me, right? I'll be happy to help you. Home inspectors, appraisers. The closing I did this morning was with appraiser, super cool guy. So we were chatting about what's going on in the real estate market on his side of things, and it was super interesting. So title officers and home insurers, all these people are going to be involved in your home buying journey. So you just want to make sure you've got the right people to help you along the way. Things that you can look for right over here, make sure they're local people who are knowledgeable. They've got local expertise, that they are going to counsel you and educate you along the way. You're not going to ask them a question. They're just going to give you a flat out answer. They're going to explain to you how things work, why they work that way, and allow you to make an informed decision, right? Because they may, based on their experience or what they think, they may think something's right and just say, hey, this is the answer. Whereas if you knew all of the facts, you may have wanted to make a different decision. So just make sure that people are willing to counsel you, educate you, and help you out, that they're not just going to skip jumping on down here to the last one. They're not going to pressure you into making a decision that you don't feel comfortable with or you don't feel right just so they can push something off on you, right? I remember looking at some houses, had a real estate agent. This was back before I became a real estate agent. And every house we looked at, she's just like, oh, this is really nice. This is wonderful. This is great. And I'm like, okay. I mean, some of them were nice, but there were some that I didn't like. But I just felt like she was just trying to push us into, choosing a house. And we were just looking, right? We wanted to see what was available, what was out there. And, you feel like you're under pressure, so to speak, to make a decision. And you don't want to be that way. Obviously, if you're ready to run, if you've been approved for your loan, everything's good, and you're ready to buy, you want them to be there, help you, and push you along. But you don't want to feel pushed into something you're not ready for, right? So just make sure that the people who are helping you aren't going to be pressuring you into stuff that you aren't ready to do. And obviously that they have a lot of industry connections. This is super important. I did a closing down in Sarasota, and the day of closing, I was talking to the guy later, and he's like, he got a call in the morning. He woke up, the lender was calling him saying, hey, we did a quality control check, and because you're moving to Florida, and they had a bunch of questions about his business, they decided they weren't going to go ahead and approve his loan the day of closing. So it was a mad scramble. Fortunately, his real estate agent was really good, connected with somebody that she knew, and they were able to get everything done that they needed to close on the house that day. But that's why when you're building out your team, look for people who have experience, knowledge. You're going to be able to help connect you with others. They're going to counsel, educate you, and they're not going to pressure you along the way. Woo! I'm talking fast here because we got a lot of ground to cover, and I want to make sure to give you all the information you need. So again, if you have any questions, drop them in the comments below, and that way I'll circle back around. We'll answer your questions. Step number 4, go ahead and you've talked to a bunch of people, choose a mortgage broker, a lender, someone that you feel comfortable with, that you like, and think can get you a good deal. Talk to them and apply for a loan. So getting pre-approved isn't a long and complicated process. A lot of times it can be done right online, right? So we can talk to you, ask you some questions. If it looks like you've got a good chance of getting pre-approved, we'll send you a link. You fill out a couple of questions, forms, couple of questions, right? Take you several minutes, 5-10 minutes to fill everything out. But typically right away you can, with the automated underwriting processes, get pre-approved pretty fast for a loan. So you're like, hey, this is how much we'll lend you. This is what you've been pre-approved for. And you can take your pre-approval letter and start shopping around for a house. But part of talking to a mortgage broker, even before you apply, is just finding out what loan products are available to fulfill your needs, are going to get you the best deal for your situation. And it's important getting the pre-approval letter, like we said, because people go out and start looking at a house first and then come trying to get approved for a loan, and they can't get approved, or they get approved for a lesser amount than the houses they were looking at, which can be frustrating. So when you get that pre-approval letter, the lender says, hey, we'll pre-approve you for $400,000. You can go out and have feel pretty confident knowing that when you find a house in that price range, that you'll be able to get approved for that loan. So it'll increase your bargaining power when you're talking to the sellers. A lot of times, even when I'm looking in the system at houses for people, I'll see that part of the qualifications down at the bottom. It'll say, only show the house with proof of funds, right? So sellers and the listing agents typically don't just want tire kickers coming in. They want to know that you've been pre-approved, that you're vetted, and you're not wasting their time. And so oftentimes they will ask for a pre-approval letter. So it'll just help you. So when you find the house of your dreams, then you're ready to go. You've already got the ball rolling even now, so you're ready to pull the trigger fast and jump on the house of your dreams. So you're not just sitting around trying to get approved at the last minute. So let's talk about what kind of loans are available and give you a little bit of information about each one. Obviously, we're not going to go into a whole lot of detail. We can do that later. If you have questions, you can call us, and we can talk about what kind of loan would be a good fit for you. But we have conventional loans. Typically, they are backed by Freddie Mac and Fannie Mae. They require a 20% down payment. So if you're looking at a $400,000 house, you'd need an $80,000 down payment, right? Whereas with the FHA loans, you can get in for as low as 3.5% with a credit score of about 580 or better. They will go as low as 500 on your credit score, but then you have to give them a little bit more on the down payment, typically around 10%. But if your score's good, you can get an FHA loan for about 3.5%. I've even heard of some as low as 3%. The VA loans you can get in for with a 0% down payment. They guarantee them, and if you're a veteran, you use your eligibility, right? The amount that they give you, so that you can get into a house without even having to make any sort of down payment, as well as the USDA loans. These are typically for rural areas or small cities of less than 35,000 people, but most cities in the U.S. have areas that do qualify and will fit into this. So even if you're in a city area, just talk to them about the house you're wanting to buy, where you're wanting to live, and see if one of those you can get approved for, because they will go as low as 100% on their loan coverage, whereas the conventional loans are only 80% in FHA or 96.5, right? So these two here are 100% loans. Jumbo loans is anything over the limit in the county. So conventional loans are typically running around 600, most counties is $640 some thousand dollars, and anything over that is a jumbo loan. So they'll typically require a higher interest rate, stuff like that. Your HELOCs are your home equity loans. So if you already have a home, I see a lot of people here recently who are taking out, they want to buy a new home, but they don't want to sell their house and be homeless, right? Because they're thinking, if I sell my house and I can't buy another one, what am I going to do, right? I've actually had this pop up a couple of times where people, they sell their house and they don't have anything else ready to go. So I did a signing down in Clearwater. They're like, we just sold our house. We have no idea where we're going. But fortunately, the buyer was super nice and he gave us 60 days on a leaseback agreement for us to continue living here. So that's what I've seen some people doing. Others are actually taking out a home equity line of credit on their first home. They're using that money to buy a second home, and then once they buy the second home, then they'll sell the first one. Or they'll even buy, there's one I did way down in South St. Pete, and it was around Madeira Beach, St. Pete Beach area. They actually took out a home equity line of credit to buy some land so they could build on it, build a new home. So that's what some other strategies that I've been seeing out there recently. But anyways, these fixed rate loans are nice because they're loans that you're going to be paying the same amount of principal and interest over the term of the loan. So if you get a 30-year fixed rate loan and your payments are $1,000 a month, then you're going to be paying that $1,000 a month on principal and interest. Now, that doesn't include your escrow money, what you're paying for insurance and taxes, because those will go up over time. But the actual amount you're paying for your loan is fixed. Whereas the adjustable rate mortgages, these loans here, they typically fluctuate depending on the index that they're using. And so you've always got the risk. I mean, there's a chance they may go down, but there's also the risk that they may go up. So typically you want to be careful with those. If you're looking into those, they're nice because you can get approved with less money right away, and that gives you time to build up your credit or do whatever you need to do, make more money to pay that off later on. But typically, if you're on a fixed income, if you're using disability income or Social Security income or whatever, and you're on a pretty much fixed income, you know it's not gonna, you're not looking at a whole lot of increase, you probably don't want to jump into one of these right away. And fixed rate income will be better for you. And probably like, say, 95% of the loans that I see people taking out are fixed rate loans. And interest only loans, these are typically just loans where people are planning on selling right away or doing something else with them, and they're not worried, they're just paying off the interest and then they pay down the whole loan at some point in the future. But anyways, continuing on here, while you're talking to your lender, just make sure to find out about first-time home buyer assistant programs, down payment assistant programs. Every county has them. They can help you out. Your lender typically has programs that help you out where they'll give you up to $10,000 in a forgivable grant or an interest-free deferred loan. So the forgivable grant is, let's say, for example, if you make the first 36 payments the first 3 years, they'll forgive that portion of the loan, right? Or if you make the all of your loan payments over the 30 years, they'll forgive that portion of the loan. Whereas if you end up selling the house before that, then there are prepayment penalties or you'd have to pay back that amount. So typically, when you talk to your lender, say, hey, what kind of down payment assistance programs do you have? What kind of programs do you have that can help you out with my closing costs? Look at your county. Pinellas has, I think they'll go up to $25,000. Pinellas, I think you can actually get up to $40,000 in an interest-free deferred loan. So definitely look into those. Typically, you have to take a class, apply for them. There was a couple that I closed with up in Pasco here in the Trinity region recently, and they were super excited I just remember at one point signing the documents, the woman's just like, wow, I can't believe that I never thought I'd own my own home. And they were actually signing for two loans. So they had the first part of their loan that covered the main portion of the home they were buying. And then they had a second loan, piggyback loan there, that was paying the down payment portion. And they said they paid like $1,500 out of pocket. That's what they had to come up with. And the rest was covered by their loan. So they were super excited. So those are just things that you definitely want to look into, especially if you're a first-time home buyer, or even if you haven't owned a home within the past 3 years, even if you've had a home in the past, but you can still apply for these as well. So here's a question. What if you can't get approved for a loan? And this is an interesting one because it comes up a lot. People who aren't ready to, because of their credit score or not having the down payment, aren't ready to go ahead and jump into a loan, won't get approved for it. Remember, we said the market is super hot, right? So a couple of questions here that come up pretty frequently is, okay, I've seen people do this. They're selling their house and we're going to rent for a year or two until the market crashes. And that's what I hear people saying. Or I hear people saying, I'm not going to buy a house right now. I'm waiting for the market to crash. And unfortunately, as you see here, the tendency is that prices are going to rise. Sure, there are ups and downs and dips along the way, but in general, prices are going up and they're going to continue going up. So you might be lucky. If you're ready, when prices go down a little bit, you can get a discount on your house and buy a house for a good deal. But overall, the market's pretty strong, and the people I'm listening to, the experts, are saying that they're not expecting a crash anytime soon, right? So the market may correct. Higher priced houses may come down a little bit. Lower priced houses may go up a little bit. Houses that are middle are just going to continue where they're at. And of course, the market's going to keep on going up. Sure, interest rates may go up as many as 3 times, I've heard here. They've already gone up a little bit. So when I first started, I was seeing rates as low as 2%. I think I saw like 1.99, 1.95 on a VA loan. And I didn't even really pay attention to it. I was just signing the documents, and his friend came over to sign as a witness, and he's like, dude, how'd you get this interest rate? But it was super low. But now we're up to, average I'm seeing is like 4.5%. I've seen them as high as 5%. But typically the loans that I'm closing right now are the ones that people started the process a couple months back, so they're still in that range. But rates are going up, right? The tendency is to go up on those rates. So even if the market does dip and you get a good deal on the house, at that point, you're going to try to get a loan, but you're going to be paying higher interest rates. So the prices of the houses may go down, but your interest rates are going to go up. And so, whereas if you could have gotten in right now, well, the interest rates are super low and bought a house, even though the prices are a little higher, hopefully your equity will keep going up. But those are just some things that I want to throw out there, right? Because that's what I hear a lot of people saying, hey, we're just going to wait till the market crashes. Like I said, I sold a house to a couple. They're like, did the closing. They're just like, we found a place to rent. We're going to keep renting for a year or two. And when prices drop, we're going to buy a house. So hopefully that'll happen. But remember, on that chart, those prices, the tendency is going to continue going up. But that's kind of what I'm getting at here. So if you can't get approved, or even if you're waiting for the market to crash, here's a strategy for you, right? So here's what I see happening a lot. I've been talking to a lot of investors, people who want to buy properties in Florida because they know it's a hot market. They want to buy them to rent. They want to get into short-term rentals in the Tampa Bay, Orlando area along the beaches here. So they'll come in, they'll buy a house, they'll fix it up, and then try to resell it for a profit. So if you're selling to an investor like that, basically you're leaving profits on the table, and they're just coming in, fixing it up, and selling it for even higher. There's a house back here behind me. Remember when I first moved here, they were trying to sell it for $600,000. I saw some pictures the other day. It's Somebody must have bought it, fixed it up, and now they're selling it for like 1 point, I don't know how many million, but a lot more than it was selling for a year or so back. So the investors are coming in, buying up your houses that you're selling cheap, taking the profits on you. Talk about strategies. If you have a house to sell, I can explain to you how you can actually make sure you get those profits and don't give them away to somebody else. But obviously that's if you're a seller. We're talking to buyers here, so I'm not going to jump into that right now. But if you're looking to buy and you have a house you want to sell, hit me up and ask me about that, and we can talk about your options there. We've got several for you. But so what they'll do is they'll take the house and resell it, or they will just rent it out. So they buy the house with a hard money loan, paying higher interest, take 3, 6, 8 months to fix it up. Then they'll refinance it with a traditional 30-year loan, so they're paying less interest rate and lower monthly payments, pay back the hard money lender, the amount that they borrowed to fix it up, and now they put somebody to rent it in there. And basically, if you rent that house, you're just paying their mortgage, right? So they may get maybe charging $2,400, which is kind of where the typical house starts here in this area. And most loans that I see for houses in that price range, they're getting pretty good rates and paying a lot less. So basically, if you're renting, you're paying someone else's mortgage. So nothing wrong with renting. Don't get me wrong. If you're moving to an area to get to know it, you're not sure how long you're going to be there, then renting may be a good strategy for you. But if you're in the market, if you're ready to buy, your rents are going up, and you're like, I could be paying less for my own house than I am to pay somebody else's mortgage, then this is definitely a good time to get in. So this was something I saw recently. Some people were living in an apartment. The place needed to be remodeled, so they basically had to leave when their lease was up, find a more expensive place. Whoever owns that place is probably going to fix it up and then rent it out to someone else for a lot more, right? So a lot of times too, I see investors come in, they buy a house, especially newer investors. Things don't go according to plan, and then they can't finish remodeling it, getting it up to par, so they try to sell it and pawn it off, and it's pretty shoddy work. So those are just things that we see happening out there. So if you can't get approved for a loan and you need some time to work on your credit score, you need some time to save up for your down payment, here's some options for you. You can look into a rent-to-own option or a lease option. So the rent-to-own option, there's some great programs. You get pre-approved just like you would for a loan. You go out, you look for the house that you like. The program will buy it for you. They'll rent it back to you. You live in there. They'll give you, say, up to 5 years for you to rent it from them. And in that time, you can work on boosting your credit score, saving up for your down payment. And eventually, when you do get approved for a loan, you take that money and you buy the house back from them. So that's a rent-to-own program. There's some great options here in the area. So if you want to talk about that, feel free to hit me up with that as well. Lease options, basically the same thing, except they're not buying the house for you. You just talk with the seller like, hey, I want to buy, but I don't have the money right now. They'll lease it to you, and eventually you have the option to buy it from them. So you could look into that as well. That was just kind of a caveat here, side note, but I wanted to throw that out because I do see that coming up quite a bit. So now we're at step number 6, right? You've done everything you need to do. You've gotten pre-approved for the loan. You've gotten your pre-qualification letter. You're ready to go. So this is where your real estate agent is going to help you start searching for a home. You want to come up with a list of criteria, what you're looking for in a home. You want to make sure that's clear to your real estate agent. I got a request from somebody to show some homes here about as a little ways up, because I guess it was too far for the real estate agent to drive, so they wanted a local realtor to show the houses, so I went to show the houses. We looked at all the houses. None of them had a pool. The very last house, the lady's like, yeah, we've been looking for a house, but we're not in a big hurry, and we wanted something with a pool. And so I told the real estate agent, like, hey, they're looking for a house with a pool, and, the real estate agent's just showing them houses, but none of them actually met the criteria they were looking for. So when you have your list of criteria. Make sure you share that with your real estate agent so that way they can narrow down the search, right? We can go into the MLS system and actually see all the houses that are available to sell. We can find the ones that are in an HOA, the ones that aren't. We can find the ones that have a garage, the ones that have a carport, the ones that allow pets, the ones that don't. So all of that your real estate agent can niche down for you very specifically and help you find a house with the criteria you want. So what are you looking for? It's important before you even talk to your real estate agent that you know what's important to you. So think about the houses you've lived in, what you liked and didn't like about each one, and come up with your list. What are the deal breakers for you? And what are the things that are nice that you'd like to have but aren't necessarily deal breaker, right? The kind of house you want. Do you want an actual house? Do you want a townhouse? Do you want a condo, an apartment? You know, how many bedrooms, how many bathrooms? Do you want to be in a specific neighborhood? How far from of a commute do you want from your work? How do you want schools for your kids? Do you want yards for your pets? Right? Especially HOAs can be a deal breaker for a lot of people. So I had some people who were looking for a house, started looking around, came up with a whole bunch of houses, and they're like, oh yeah, by the way, we have 2 dogs. So then I had to go back through and, out of 20 houses that were available, there were 3 that allowed pets. So you just got to be aware of those things. If you do have pets, you make sure that they're not in an HOA, or that the HOA does allow them or doesn't restrict the kind of breed that you have. So I would say here in Florida, we have a lot of HOAs. This is a question I see a lot of people asking about, especially if you're moving in from out of state. But the HOAs, I checked just this week, and I saw that we had like just under half were in HOAs, and a little bit over half were outside of HOAs, but it was pretty close. But we do have a lot of HOAs here in Florida Homeowners Association that can have rules and deed restrictions, etc., that you do want to be aware of if you're getting into those kinds of properties. So just something to look out for. So a garage, a pool, fenced-in yard. Do you want the yard fenced in? Do you want it in a flood zone or not? Especially if you're coming from other states. Here in Florida, a lot of areas are in a flood zone, which means your insurance rates, you're going to have flood insurance, are going to be higher, more requirements by your lender. So I actually have people say, hey, I want a house, but I don't want it to be in a flood zone. So all of that, your real estate agent can help you pick out even before you go look at it. So what I like to do is when somebody says, hey, this is the kind of house I'm looking for, I'll go in the system, look in the area that they're searching, see what's available, and I'll just record a quick video, just like I'm doing right now. Take 5-10 minutes, just show you, hey, these are options, this is what we've got, and then they'll say, oh, I like this, I don't like this. So we'll narrow the search down or expand it out based on what you're looking for. So just make sure that you're really clear that when you're talking with your real estate agent, it's important for you to be clear yourself, so that way you can explain to them what you're looking for and they can help you find it. Although you don't want those things that aren't a deal breaker to be on your deal breaker list, because if you say, hey, I want a house with a pool, let's say your realtor looks in the system houses with a pool, there's a really, really nice house that you would have bought, you would have been happy to buy and put in a pool yourself, but because you said you wanted a house with a pool, the real estate agent didn't show it to you. So things like that you just want to be aware with, but just keep those lines of communication open. Besides looking in the MLS, where your real estate agents typically list homes, so the seller agent who's working with a seller is going to list the home, and people who are working with buyers are going to look in there to see what's available. There are off-market homes available. So if you get into our VIP buyers program, we will actually help you find houses not just in the MLS system, but also look off-market for you and find houses that aren't typically listed where most real estate agents are looking. So that's just another thing. Keep your eyes open as you're driving down the street. There's a lot of for sale by owner places that are up for sale that aren't listed, that real estate agents aren't looking at because they're not sure if they're going to get a commission or not or whatever. So you just want to keep your options open. Talk with people and even let people know, hey, we're looking for a house. This is the kind of house we're looking for. If you know of something, let me know, right? And if you find something, let your real estate agent know. Take them to go look at it with you. Also, new builds. New builds are really important. I hear a lot of realtors telling stories like they're working with someone sees a new house, they go and they buy it, and they end up spending a lot more money. So if you are going to look at new builds, just make sure that you have your real estate agent look at them with you. It can save you an extra $5,000 to $40,000. This is like super important. So actually put it in here as its own slide. But your realtor's knowledgeable. So even though it's a new build, you see a lot of problems with people going out to inspect their construction. They take an inspector with them, someone that's knowledgeable. See a lot of videos like this on YouTube, and they see that the house is going up, but it's super shoddy work, or they're just kind of covering over problems. And if you aren't paying attention, that can be a big issue down the road. So another thing to look out for is that the closing cost assistance can be bait for a higher interest rate, which could actually end up costing you more in the long run. So even though you go to a new build place and you're looking at those new homes, typically the agent on duty represents the seller. He's just trying to sell the house to you. So if you have your buyer's agent go with you, represent you, he can actually look out for your best interest and help you out with that. But there are a lot of new builds going on here in the area, especially if you're wanting to move down to Florida. There's a whole section up here. Just yesterday I was talking with someone who was we're doing a closing, and he was telling me that the whole area behind him, which is all wooded going up a little road into the Trinity area, Newport Richey area, they're planning on, and I actually saw signs when I was driving into the neighborhood like boycott, I think it was Plath Road Development or whatever. So I asked him about it. He's like, oh yeah, they're going to build 3,500 houses here over the next 10 years or so. So a lot of new builds going up. Some people love them. Some people want a new house. Some people hate them. Some people are like, I don't even want to look at new builds. So if you don't want to look at them, no worries. But if you do, there's a lot of options here in Florida in the area. Just make sure that you take someone in with you that is knowledgeable, knows what to look for during your inspections and your final walkthroughs, and can look out for your best interest there. So just wanted to throw that out for you as well. Number 7. So once you've actually found the house of your dreams, the house that you love, the house that you want, you're ready to make an offer and begin negotiating. So remember, your dream home is just one offer away. So once you find it, you got to jump in and make a really strong offer that gets accepted. Because remember, multiple offers are going in. People are bidding these prices up. So the very first thing you want to do, obviously, is talk with your real estate agent. Make sure that they do a comparative market analysis. Typically, this is done on the seller's side. So when the seller wants to sell their home, their agent, the listing agent, does a comparative market analysis to see how much they can sell it for. Now, obviously, price is relative. The house is worth what somebody's willing to pay for it, right? But they do a comparative market analysis. Typically, buyers will just often take that analysis and pay whatever it is that they say it's worth. But have your real estate agent do their due diligence, make sure that's really what it's worth. This is a strategy. I'm going to share this with you here. So don't tell anybody about this, but what I see investors doing is they'll actually come in, because sellers typically want to sell their home fast, right? Even real estate agent, it's kind of like we're going to set the new record here, right? So typically I'll see real estate agents, we're going to come in, we're going to do an open house on Friday, boom, 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 Saturday and Sunday, and we're going to sell it by Monday. And like I said, the lady who sold her home in 4 hours, right? That's crazy. So if you look at the statistics, real estate agents, when they sell their own home, will actually keep their home on the market 10 days longer than the average home seller, because they know that a higher offer could come in. But typically it's like, 10 days is the average. But what I've been seeing, a strategy that investors use here, is they don't come in and just buy houses that are up for sale and they're not trying to bid those prices up, right? They'll wait 15 days. It's kind of like the sweet spot, because typically sellers want to sell in 15 days. If you see a house not selling in those first 14, 15 days, they're dropping the price. Typically, it's because of price, right? Those homes aren't selling. Now, obviously, there are a lot of factors that go into homes, so it might not just be because of the price, but that's one of the big factors. So if a house doesn't sell within 15 days, they're dropping the price. So, for example, I was talking with a guy just last week, said that there was a house on the market right here in my city It was going for 700 some $1,000, and they waited. It didn't sell within those 15 days. They made an offer $100,000 less than the asking price. They got it for 600 some $1,000. And so if you're not in a rush, if you want a little bit of a waiting period, wait, give the house some time to cool off. And if it hasn't sold, then you can make a lower offer and have a better chance of getting accepted. But that's just if it's not a house that you really, really want. Like, this is an investor. He's just buying houses to make money, right? So he's like, oh, we're going to fix it up, spend $125,000 to fix it up. Total cost for them is $800,000. They'll sell it for $1 million plus, and looking to make some money on their end. But if you're looking for a house, that may be a strategy for you. But if the house is a house you really, really want, and there's a lot of people bidding on it, and the price is right, then you're going to want to come in and make a strong offer. So that's what we're going to talk about here in the next slide, which is actually how to make a strong offer. And it's not just the price, right? So just because someone's offering $20,000, $30,000, $100,000 over asking price, remember the lady took the lower price because it was guaranteed. So cash offers are really strong. Cash offers are 290% more likely to be accepted in the market. If you can waive the financing contingency, if your lender will let you do that, which they probably won't, but there are some lenders who give guarantees and assurances, and they can give you approval letters that will waive their contingencies that I've seen. That can increase your chance by 66%. But I typically don't recommend you waive your inspection rights and stuff like that, just because that can cause issues down the road. We'll talk about that in a minute. But let's say that you want to make a really strong offer. You don't have a whole lot more over you can go than the asking price. What else can you use? Number one, or actually number two here on the list after asking price, is putting down a large earnest deposit. The earnest deposit is the amount of money you put down that just shows you have skin in the game. So let's say all four of those people came in and made an offer and they put down an earnest deposit. Typically $2,000 to $5,000 is what I'm seeing. Go up to $10,000 or whatever. It's just however much you feel comfortable risking. So you come in and you say, hey, look, I want to buy this house. I'm going to put down a $5,000 earnest deposit. We're going to do our inspections. We're going to do the appraisal. If everything's okay, that money goes toward the final payment of the house. But if I decide for whatever reason that I want to walk away, I don't like it, I choose to walk away, I can walk away, but the buyer leaves that money with the seller, right? That's the earnest money that shows their earnest. But if they choose to walk away, they lose that money. So if you put in a larger down payment, a larger amount of the earnest payment, that just shows that you have a little more skin in the game, that you're willing to risk more, that you really want it. That could be an option. Number two, less contingencies. Like I said, don't waive your inspection contingencies and all of that. Typically what you want to do is give them a lower time. You already have somebody lined up. Remember your network. You've got your team. So you've already got a home inspector lined up, and you say, look, I've got the home inspector ready to go. If we close on this today, I can have them out here within 5 days or less, inspect everything, make sure it's good to go, and we can close right away. So that's what you can do instead of, just lower your contingencies. I see people saying, oh, I want to buy the house, but it's contingent upon the sale of my home up in Nebraska or whatever. So then the seller's like, okay, you want to buy it, you're offering a good amount, but we have to wait for your house to sell, and then that can just kind of throw a loop in the deal, right? So they might be like, oh, we'll sell it to this other guy over here who's offering less, but he has no contingencies or less contingencies. So those are just some things to think about. Also include your pre-approval letter. Make sure that you get that pre-approval letter in there so they know that it's solid, that you're good to go, that your bank has already pre-approved you. And also write a personal letter. Just say, hey, I've seen this happen a lot. I was closing with a couple who was selling their home, and while I was there, they found out that their offer was accepted, and it was because they had written this really sweet letter talking about the house, what it meant to them, why they wanted it, blah, blah, blah. And the lady started crying. It really meant a lot to her. So by writing that personal letter, that swayed the seller to let them buy the house. I also was in a closing one time where the buyers and sellers were there together. Typically, I'm signing with either the buyer or the seller, but sometimes they'll both be together. And at the end, they were like, "Oh, we really liked you guys. We really wanted you to have our house. We met you the day you came to see the house. We met your family, your kids. We really liked you." And because of that personal connection, they actually ended up accepting their offer. And then, of course, another option is just the appraisal gap. Let's say that the house you're looking at is $300,000. That's the offer you make. It gets accepted. You're under contract. The bank sends out the appraiser. The appraiser looks at it and says, it's only worth $280,000. So the lender is not going to want to loan you the higher amount because the appraiser says it's not worth that much. So at that point, if you have an appraisal gap in there, look, we'll pay the extra, money, the difference between the loan and the sales price up to $20,000. Then they know, they're like, okay, the sellers know that their house isn't in great shape. It might not pass the appraisal or whatever. And that way you're giving them some guarantee that even if the house doesn't appraise, you'll still end up buying it. Whew, I'm running out of breath here, but we're getting towards the end. So hang on, a couple more things that I want to go over with you. Once you've got it locked in, you're under contract, your offer's been accepted, and let's just go back here to making the offer, right? One of three things can happen. One, your offer will be accepted. Congratulations, you got it under contract. Number two, the seller comes back and makes you a counter offer. They're like, hey, we like your offer, but we don't agree with this point here. And, they'll negotiate back and forth on that. Or they may just reject it and say, sorry, we chose someone else. And then you've got to wash, rinse, repeat, go back and start searching for houses again. But hopefully it does get accepted. And at that point, you'll just go through and complete your financing, right? So basically your lender needs to take that house and approve it using that house as the collateral for the loan. Obviously, you've got your pre-approval letter, but this is where the rubber meets the road. They're actually going to dive in deeper, make sure that everything, all the information you gave them is legit. They may ask you for more documentation. They're going to re-verify everything. So we're going to give you some pointers here in just a minute, things not to do during this phase. And they're going to be finishing up their verification process. So there's going to be inspections going on. There's going to be appraisals going on. There's going to be your title searches going on. All of that's going to be going on in this phase. So let's jump in here. Things that you want to do. You want to cross your T's, dot your I's, get your inspection done. Make sure the house is what you expect, that there's no safety or code issues, things that you're going to have to deal with later. You want to get a forecast of future repair costs, like, hey, the roof is okay now, but 5 years down the road, you're going to have to change it, right? Or whatever. And if there are serious issues, I saw this with a couple who's selling a house, the lender's like, hey, the roof, they had the inspection done, the roof wasn't up to par, the roof needed to be changed. So the sellers had to fix the roof before the lender would approve the sale of the property and pay the money. So that can give you some negotiating power. There are major costs that are going to have to be dealt with in the house. This is the time where you find out what those are and have the seller take care of them with you before you take over the property and become responsible for them. I put ordering appraisal afterwards because if you look at the inspection report and you know it's not going to pass the appraisal, then don't waste your money on the appraisal, right? Don't let your realtor waste your money on your appraisal. So you just want to make sure everything's good to go on the inspection, get your appraisal in, and have your appraisal done. The lender wants to make sure that the value of the property is sufficient to cover the collateral. So if you default on the loan and they have to foreclose on the property, they'll get their money back off of that property. That's what they're looking for in the appraisal. And then also ordering your title search. Title company is going to make sure that the title isn't clouded, that there's no one else can lay claim to the property. Say, for example, you bought the house and it goes back, chain of title goes back all the way so many people, they're going to verify all that. But let's say that somebody's great granddaddy used to be one of the owners of the home and something didn't go right. And now he comes back to lay claim to the property. Oh, that was my great granddaddy's, and I should have inherited it, but it got sold to somebody else, and there becomes an issue with that. The title insurance will protect you as the buyer and protect the lender. So you've got your lender's title policy and the owner's title policy, which are the two kind of policies that you can get for the property. And so the title company is going to do all of that. They're going to make sure it's not clouded, that there's no one else can lay claim to it, that there's no liens on the property, there's no open permits. And at the end, if everything looks good, they'll give you a title commitment. And it's kind of like your insurance, that if something does happen and you do end up losing the house to someone else or for whatever reason, that you've got that insurance and extra protection there. So those are the things that you want to double check here along the way. These are the things that I recommend you do and don't do. Here's an interesting story for you. I was talking to a real estate agent, and he was super upset because he had a friend. It was actually a buddy. It wasn't like just a normal client. This was someone that was his best friend or whatever, and he's like, hey, you know, his friend's like, help me buy a house. So he went out to help his friend get the proof for the loan. They were coming down the home stretch, just ready to buy the house, and his friend went and bought a brand new car, and is celebrating or whatever. And because he bought the car, now he had this extra loan in his name, and he spent some of the money in his savings account. So it messed up his debt to income ratio. It messed up, you know, everything that the bank had verified in his pre-approval letter, and he didn't get qualified for the loan. So that fell through. So here's some things that we recommend you do. If you have any questions, call us or whoever your lender is, your real estate agent, and ask them. Continue living at your current residence. Continue paying your mortgage or rent. Continue to use your credit as normal. Keep working at your current employer. Keep your same insurance company. Stay current on all existing accounts, and expect requests for additional documentation. The main idea here is don't make any major changes in your life, anything different than what you got pre-approved for. Things that you should not do: do not make any large purchases. That money, that's going to affect your debt to income ratio. Don't change bank accounts. Don't make large cash deposits. As part of the Patriot Act, the lenders need to know that you're not laundering money. So if large sums of money just show up unaccounted for, that could be a red flag. Don't transfer balances. Don't close any credit card accounts. Don't apply for new credit. Don't take out a new loan or co-sign for anyone else. And don't max out or overcharge your credit card. Things like that, major changes that you make at this stage of the game when you're under contract, can throw everything off from your pre-approval letter, and you might not get pre-approved. So let's just say you go under contract, you're super excited, the house is almost yours, you can feel it, and then boom, the lender's like, hey, sorry, you know, something happened here, you made these changes, and now we can't approve your loan. And then you'd be extremely frustrated. So just to save you that disappointment, make sure that you don't do any of those things. But hopefully everything will go well. You can start planning for moving day, right? All this is going on behind the scenes. The house is being inspected, appraised, title searches is going on, and you're just planning for your moving day. Again, in the complete guide to buying a home, we have some checklists here, things to do a month out before your moving day, a couple of weeks before your moving day, the day of, 2 weeks. Okay, so here we go. A month before, 3 weeks before, 2 weeks before, 1 week before the move, and on the day of moving. And talking about choosing and hiring someone to help you if you're going to be hiring a mover or if you're just going to rent a truck yourself. So plenty of tips in there. We'll give you the link to that here at the end where you can get that book, read it online, or you can actually request a physical copy. But while everybody's doing their thing, you're getting ready to move. You're starting to pack. You're throwing away the things you don't want. You're packing the rest of the stuff so you're good to go on moving day. If you need to hire a crew or if you're just going to get a truck yourself, make sure to call your utility company and let them know that you're selling the house, that you're moving out, to shut down, take everything out of your name, and then get things transferred over to the new property that you're getting, etc. So this is your part of the planning, getting ready. And then congratulations, finally, on the day of closing, your lender is going to give you the clear to close. They're like, hey, great, inspection's good, appraisal's good, title's good, we're going to close on such and such a day. So you'll probably either go into the title company. Here in Florida, we have title companies that do this stuff where the title officers and escrow officers work. And or they may just meet you at the property, send out a mobile notary, someone who can help you close and walk you through all of those documents. So when you get to the property on closing day, typically within 24 hours, typically it's the same day. So if you're going to close at noon, you'd walk through the property in the morning, make sure that everything's okay, in shape, that all the things that you agreed on with a seller, they did, based off of the inspection, that there aren't any major damages that got left behind, and everything's good. Something I did see once, I was in a closing, I was signing with the sellers, and while we were there, the buyers were doing their walkthrough, and they called and they're like, hey, the dishwasher's not working, and the sellers were like, well, it'll work just fine for us. For whatever reason, it stopped working that day when they did their inspection. And then the agent was going back and forth with the sellers. What are we going to do? And eventually they just decided, instead of, trying to get someone out there to fix it and all that, we're just going to, see how much a new dishwasher is, wrote a check, gave it to me. So when I drove over to the title company, so the sellers were signing at their home, and then I drove over to meet the buyers where they were signing at the real estate agent's office, and we signed there with them. So after they signed everything, I gave them the keys and the check and all of that. But on the day of closing, when you're doing your final walkthrough, that's what you're doing. You're just checking to make sure everything works, that it's up to par, the appliances that got left behind are working. If there was anything this was another story that happened down in Gulfport. So I signed with the sellers, sign at the house, they're moving trucks there, they're getting everything ready to move out. And then I go to sign with the buyers, and they are not happy because they were promised a table that didn't get left behind. Now, typically, the only things that stay with the property are fixtures, right? The chandelier, the fan, the drapes, or things that are actually attached to the property. Everything else goes with the sellers. But sometimes people negotiate, right? Sellers don't want to take everything, so they'll either offer it as part of the deal, or they will just sell it. Hey, we've got all this stuff that we're going to include here, and people will buy it. But for whatever reason, they had agreed on leaving the table, and the table didn't get left behind, and the buyer was not happy. But unfortunately, she didn't have that written into the contract, so there wasn't anything she could do. She talked with her real estate agent and everything, but as far as I know, when I left, they weren't able to get that table back. So moral of the story here is, if you are expecting something, just make sure you get it in writing, get it in the contract, right? So once you've checked the property, you've done your final walkthrough, everything looks good, you meet your closer wherever you're going to be meeting them, at the title company or there at the property, and you're going to sign them. There's going to be 150 to 250 pages for you to sign. Lots of stuff you're going to go through. We can do another session sometime to kind of walk you through those documents and explain what it is that you're signing and what they mean and everything. But once those all get signed, then the title company is going to scan them and send them to the lender for the lender to look through, make sure that all the T's were crossed, all the I's were dotted. If everything looks good, they're going to call the title company and say, hey, we authorize funding. And then the title company will pay the seller, send them their money, your money actually, and you get the keys, and the house is yours, and everything's transferred over to you. And then, yay, congratulations, right? So a couple of things here that I just want to share with you that are important, so you're not stressing out. It's a big day, lots going on. So some things that I see happening, there's two things typically. One, people don't bring the right ID or the right type of ID, which can really mess things up. And number two, they don't plan properly for this time, and they've got other things scheduled in. I've got to be back to work in 20 minutes, or I've got something going on. So when you go in, make sure you have two forms of ID. All right, one has to have a photo, like a driver's license or passport. It has to be official government issued ID here in the state of Florida. Here in Florida, you have a list of documents that are acceptable, and everything else is not. And I see this happen a lot. So I get there, somebody's driver's license expired. That causes issues. They've got their name spelled with junior, but they don't have junior in their ID. So I don't know if they're really junior or, their son is junior or what's going on. And little things like that. So this can really throw a wrench in the, how does that expression go? Throw a wrench in the ring or whatever, if you don't have the right idea. Because the notary, the person who's notarizing your documents, has to know that you are the right person. Now, obviously, you probably are. 95% of the time, it's just an issue with the documents and the ID that needs to be resolved somehow. But the notary, can't just take your word for it, because he's got to get proof of that, get your ID, send it back to the lender. The lender has to prove it. Because of the Patriot Act, there's a lot going on there. So just make sure that the way you're going to be signing documents is what your ID says. I had people who changed their names, and then I asked for them to prove it. They're like, but I'm this me, right? I had this happen once. I was way up north, about an hour from here. People had moved up there, and the guy's name is Greek. So he had some Greek name on his ID, but on the documents it had some very Americanized version of his name, John Smith or whatever, right? And he's like, but it's me. Don't you think I'm a criminal? And I'm like, no, I know it's you. I know you're not a criminal. At least you don't look like a criminal. But, you got to prove to the notary that you are the person that's supposed to be signing because of all the real estate fraud. And so we had to go through and actually, find people. In his case, what we did was we got 2 credible witnesses. So the state of Florida allows for 2 credible witnesses to verify that they are really the person that's supposed to be signing. And so sometimes when someone doesn't have a driver's license and can't get it right away, that's happened before. I went to a signing. The lady, her driver's license had expired. She didn't realize it, and she didn't have any other form of ID with her. So we had to get credible witnesses to swear that she was the person that was supposed to be signing. So things like that could just, probably won't happen, but it does happen from time to time. And just make sure that you're aware of that. So 2 forms of ID, not just one. Your driver's license. The second form doesn't have to have a photo, so that could be a social security card, voter's registration, something like that. Just 2 forms of ID that have your name on it to prove to the person notarizing your documents that is really you that's supposed to be signing. Now, obviously, you wouldn't want someone showing up and saying they're you and they're not really you, right? So you wouldn't want the notary just to take their word for it. You'd want the notary to verify that, they're not you. So just look at it from the verification standpoint. That's what happens. The other thing is like I said, people show up and they're like, oh, can we sign in 20 minutes because I've got to go? I'm like, yeah, sure, we can sign in 20 minutes. I'll just shove the papers in front of you, sign real fast and take off. But most people want to know what they're signing, so I like to walk them through, explain it, show them what's going on in each document, why they're signing that, what it means, where to sign, where to date, where to initial. Then I notarize it. So it typically takes anywhere from 40 minutes to an hour for you to sign everything comfortably at a normal pace. And then that goes over to the title company. Like I said, they scan it over to the lender, which takes anywhere from another 20, 30 minutes. So you're typically looking at an hour and a half to 2 hours before you get your funding authorization. Sometimes it can take longer. If they send it out and your loan officer's out to lunch, it might not get verified till he comes back from lunch, right? So it's already going to be a stressing day. Don't have a lot of other things scheduled right away. I've got a meeting, I went to sign with somebody the other day, and she's like, well, I've got a very busy day. I'm sure you do too, but I've got work to do and blah, blah, blah. So it just puts a lot of pressure on everybody. If you've got a deadline to sign, you want to make sure everything's right. And then, of course, there were some things that she had questions about that she didn't like, so she's having to call her lender. She's having to call her title people, etc., because we were signing at her house. And you just want to make sure that you've got plenty of time to sign everything, get your funding authorization, everything goes smooth, and you're not under pressure to try to do something else. All right, that's just my 2 cents, as having done a lot of these over the years. But once you get that funding authorization, congratulations. Welcome to your new home. Don't forget to take your keys. You'll typically get those. Title company, the real estate agent, will leave them with a title company. So once you sign everything, you'll get them right away, or the other your real estate agent will get them to you afterwards. Once that funding's been approved, and then you're ready to move in. So Now that we've gone through all that, how do you feel about the home buying process now? Do you feel more informed, confident, maybe even a little excited? I hope so. I hope you found this information useful, and I'm happy to have been able to share all of this for you. If you want more information, you can grab a copy, a digital copy to read right online of the Complete Guide to Buying a Home at www.completeguidetobuyingahouse.com. That is available. If you want a physical copy, feel free to hit me up and ask me. I'll be happy to send you one of those as well. All right. So if you want to work on repairing your credit, getting pre-approved, searching for a home, feel free to join us in our VIP buyer program. We've got a Facebook, the VIP buyer club, home buyer club that you can join. We're here to help you fund and find the house of your dreams. If you know you need some help with your credit, we can help you out with that. If you know you're ready to get pre-approved for a loan, we can help you out with that. I'll get you in touch with my lending team. If you're ready to start searching for a home, I'll be happy to help you out with that. If you're looking for something right here in the area of Pinellas, Pasco, Hillsborough, I'll be happy to help you. If you're out in Orlando or a little bit farther away, I know a lot of real estate agents there in those areas, and I'll be happy to get you in touch with them, help you find somebody good that can help you find the house you're looking for. So, like I said, make sure to join us in our Facebook group. We've got the Florida Homes for Sale, where you can see houses that are available for sale. Typically, I'm throwing properties that come up for sale in there, as well as properties that are up that have an open house coming up. And then the VIP Home Buyers Club, where you can interact with other home buyers and jump in there, interact, ask your questions, and get started on your home buying journey. So best way to get in touch with me is through Facebook, but if you want to prefer to call, got 727-249-4022. If you want to email me, contact at davebailey.me, or you can visit my website at www.davebailey.me. All my social media is Dave Bailey Me. So that's Facebook.com/DaveBaileyMe, Instagram/DaveBaileyMe, got Twitter.com/DaveBaileyMe. So you can find me pretty much any of the platforms that you like to hang out in, participate in. You'll find me there as Dave Bailey Me. So feel free to reach out with any questions that you have. I look forward to chatting with you. And if you are in the area looking for a home, go ahead and get in touch with us. Or if you're living out of state and you want to move down to Florida, you want to know what are the best areas that you can, best neighborhoods to live in, places that, tell me what you're looking for. And based on what I see around here, I can kind of help guide you in the right direction, and we'll help get you in the perfect spot. So you don't have to wait until you're ready to buy a home. Like I said, we can help you out this entire journey along the way. We'll be happy to help you out wherever you're at. Any questions you have, don't hesitate to reach out and contact us. And I look forward to chatting with you very soon. All right, y'all have a good day. Don't forget to grab a copy of the book. Don't forget to join us in our Facebook group and reach out with your questions. Let us know what you're looking for, and we will do our best to get you pointed in the right direction. All right, you have a good one. Bye.